Good morning to all of you. My name is Mario Alves. I'm not going to introduce myself even more, but as you can see, I'm a typical banker. So I'm not an IT guy, but years ago, one would say, oh, this is a respectable guy. And now, after 2008, the banking guys are the bad guys. So I'm one of them. But I kind of switched sides. So I'd like to talk to you about the FinTech movement, the things that are happening in the financial world right now. And all these FinTech things that are currently happening are more or less based on the fact that everything, all of these changes are in relationship to digitalization. The digitalization as a major movement in our society is something that is not starting, but changing our behavior now day by day, not only of the young people that are becoming digital natives, but also the elder ones who are getting accustomed to using digital equipment that has become a broadband of opportunities for all of them. My 76-year-old father has bought a tablet right now, and he's developing a whole new understanding of how he could use that every day. And this is forming a really new kind of expectance that customers have in relationship to what suppliers do. And I'd like to ask these two young girls, and that is not working. Oh, hello. There's a video that should be, okay, can you click that? It should have started. I'd like to ask those two young girls what digital natives want. Hup. Hup. It is embedded. The codec is need to, oh, you haven't, okay, so let's go on. Digital natives are looking right now for things like comfort, like autonomy, like speed, like low prices. But one main thing about digital natives and people using digitalization is simplicity. As we go on in simplicity, we like to ask, what do this has, in which kind of connection does this stand with banks? Now, one major fact is that digitalization is a key in disrupting a lot of industries. We have seen that before. Look around, look for the local bookshop. They have been ripped off by Amazon in the last 20 years. And that's not only the bookshops, everything else is being traded on the internet as well, and is disrupting a lot of industries. In Germany, the travel business has turned about 70% to the internet. There are no real travel shops, travel ventures that are based in the city where you can buy your stay in Mallorca or something else. They are all buying it in the internet, and so the disruption is taking business that is more or less locally, taking it to a global level. And I'd like to ask, what is happening to the banks? You may have seen this guy. This one is the bad guy for the banks. His name is Brad King, and he has written a book that is called Banks 2.0, and another book that is written that is named Banks 3.0. His theory is that with all these technology that is coming up right now, it is no way that banks can survive this disruption over the next years. So Brad King isn't only one who's writing books about this, but he was the founder of Moven, which he sold, and is still the CEO of Moven. And Moven is a bank that is currently offering a very different service of banking services in the US. So they are currently doing all the things different than a traditional bank would do. And his theory is that, that with all these technology, the banking business can't survive in the way it is right now. So how do they do that? First of all, they ask themselves, is there a real way for disruption in banks? As we believe in Germany, there is. This is the normal look of a German bank. It's the Hypovereinsbank or a Volksbank. And they are very traditional. They are not really looking into what people would like to have from their bank in the future. And there is a strong opinion within bankers that, that they have everything customer needs, and what they don't have, the customer doesn't need. So how's that going to take place? It's going to take place by people and companies that are normally described as Fintechs. Fintechs are companies that are disrupting banks. And how do they do this disruption? This is the website of Wells Fargo, a major bank in the US, that is acting a lot of services to private customers. And what Fintechs do is that a laser pointer also? Yes, it is. They are specialized, focused, and adventurous. And what do? They're taking the offering of Wells Fargo and ripping it apart. So what they are not doing is, they don't do, I'm the better bank and do everything. What they do is, they pick up one service, like loans, or wealth management, or investing, and retirement, or insurance, and turn that into a business model. So they're not trying to compete them on a holistic level, on a level where they do everything else a bank would do, but they're picking just one process, one offer, and build a whole new customer experience around that. So that I, myself, can use this, get the customer experience, get used to it, and stay with it. And you get one example that is very, very big, and about 10, 15 years now on the market. That's PayPal. PayPal is the best example because that's the way to pay something you did with someone you don't know, someone who is apart, someone who's remote, far away, on a very easy way. I just paid 2 bills yesterday, and I typed in the IBAN. I don't exactly know how many numbers these are, but it is, if you don't have a voice inputting system, it is quite hard to. DE and everything else. 16? Thanks a lot. And how does it work with PayPal? You just need to have an email address. And with the email address, you can transfer money. And it feels safe. If it is safe, I'm not sure about that, but it feels safe. And so PayPal went very large. What's the third largest or the third most valuable financial service company in the world? It is PayPal. PayPal is more worth than the Deutsche Bank and the Commerzbank altogether. Something no one would have imagined years ago. And these guys are doing the same. Okay, they say, okay, what we have done with payments, we could do with lending, we could do with investing, and and they're growing, and there are new ventures every day. Funding, they're turning to the business side where they offer services to local merchants and the different things. So, what these fintechs do is they're taking banks and ripping them apart. But what we see now is that these fintechs are kind of working a different way to communicate about their proposition. Why? Because they see that banks are not really their competitors. They are more someone who they should look at as being a cooperator. And they are not talking about disrupting banks, but unbundling banks. So get the bundle, what banks do, and get that into a nice fit and say, okay, oh, we have this and this and that. We're not harming you, but we're getting straight what you all do, and we're trying to figure out which services can be done better. And with doing this, they're getting into the focus of the banks, not as a competitor anymore, but someone who can be bought, who can be tied into some contracts to get their services being a part of the bank service. To get an idea how this fintech thing is booming, that was Germany's Fintechs about 2030, so 2 years ago. That's the theme in January of this year, about 150s. That was in June, and that's Europe. There is a map that's can be found here that displays all fintechs in Europe and their networks. And this is actually awesome work these guys are doing, because they're trying to update this day by day. So if you want to look, if someone already had your grandiose fintech idea in the future, you might want to have a look here before you start investing your money. Maybe there's already someone who has this idea. This is interactive, so you can move around, and the fintech scene is also very active here in Belgium and the Netherlands. But the main discussion in Europe is right now where the fintech hubs, where the major cities in fintech will be in the next years. How did this all come? How did this growth happen? How did this trend happen? It's mainly about the money. There maybe is a connection to 2000, where we had the large IPO boom, where internet firms just in Germany, would you say, shot like mushrooms out of the earth? And the identities are not far from here, so mushrooms may be very familiar to you. But the money went bang, because it tripled in 2014. We had a funding of fintech firms about $12 billion in 2015, and we're right now, I think, about 15 billion in this year, and they're getting really huge investments for the things they do. Some examples, there are 3 firms that I look very deeply in. It's Betterment, they do wealth management and wealth fund also. They received 60 or 64 million just recently for the business of investing money. A business where banks are turning off them because there's so much regulation in this market. They are really opening up it and do it on a different way. And there is one company, number 26 in Germany, who only does one thing. They have an account combined with a credit card. So that's actually nothing. If you'd be a banker, you'd say, I can't make money with an account and a credit card. I can't make money with it. They're getting VC money to set up a new company selling only that. Based on what? A better customer experience. So, I'm asking myself, is this just a VC boom? Is this just a boom that is encouraged by money? Or is it really something that will turn the industry? In my opinion, it's both. We will see a lot of fintechs. We will see a lot of fintechs closing down. But what we also will see is that the customer experience they are shaping, they are developing, that this will be turning the financial world around, and it means that there will be banks with better customer experience in the future years, but also there will be new competitors in the market who will combine better customer experience to a new service under a new label. Maybe something like Amazon, a digital financial marketplace, where you can choose your different services, but under one hood with one respectable partner who will deliver these services tailor-made to your convenience. What do these fintechs do? they do everything. They get on track with every customer segment. If retail banking, commercial banking, large companies, private banking, wealth management, you find them everywhere, and they do about everything you could do in the financial world. Okay, account management is not the greatest spot they're on. Why? Because the everyday account, the account where your money gets day by day, where you pay your bills, that's not very interesting for banks also, and it's not very interesting for fintechs as well. So they're just taking that from a bank, taking that for granted, and doing something on it, just making it easier to access, make it more visible, like personal finance management system. What they are really into is lending and financing, and what the real major attacking point is right now is payments. Payment is very interesting on a global level. On a European level, it's not that interesting because we got the Payment Service Directive that reduces the margins that can be taken from payment. But on a global level, there's a lot of things happening, a lot of interesting things also. In my opinion, what we will see is that the major successes will be in the market of investing, because that's a nice way to make money and a nice way to take profit from the loss of trust that banks have faced, and also in the financing, because banks are, especially in Germany, turning away from financing smaller firms, and I think that will be a growing business in crowdfinancing or other ways of lending money to small entrepreneurs or the private customers. Okay. Some other keywords in regard to the fintech boom. First of all, the discussion which will be the other fintech hub in Europe, except of London. London is large in fintech because of two reasons. First of all, it is the financial capital of Europe. It is largest exchange. Most of the people have to be there as a bank. Every German bank has a large dependence there. Even the Deutsche Bank has its headquarters a couple of times there because one of their CEOs was there. And now the big discussion is which will be the other one. And also, for sure, the Swiss are trying to get into that. They were lacking some speed with fintech, but now they're catching up and investing a lot. And Frankfurt is trying to do, but Frankfurt is a little bit old school banking. So Berlin, the startup capital of Germany, is trying to catch it in. Has far more fintechs right now. Amsterdam and Belgium as total is trying to catch up. France, not too well, and the whole south region, Italian, Spain, they really don't matter in that area. So, in my belief, it's about to between Zurich or maybe Berlin. In my opinion, it will be Zurich because there are much bigger banks around there, and the Swiss banks are getting into the fintech thing like hell. They're investing so many millions in ventures, in events that are focused on entrepreneurs who want to do fintech. Recently, the UBS launched a competition where you can send in ideas and get 100,000 euros as working capital just for a good idea. And that was huge, and that was really interesting for a lot of people. FinTech Bank Corporation, this is the next turn. The next turn these fintechs do, that they are not on the road where they say, okay, let's get rid of the banks, let's disrupt them, and let's dump them totally. But now they are realizing, okay, these banks have two things that are quite interesting. First of all, a lot of capital. a lot of money, and these fintech guys need a lot of money to get their company started. And the second one, and that's the major problem of every fintech not doing payments, is banks have customers. And as we all know as entrepreneurs, customers are a huge asset. And everything works better with customers. Yeah, there might be a burden because you can't do anything you want. You have to look at your customers and think, okay, how do they feel about that? But it's much easier to get a service running when you have someone who uses it. One other keyword is API banking. That's the only technical term I know. It stands for Application Programming Interface, I believe. And what these guys all do, they are trying to build services and customer experience, digital customer experience, by using technology that is really state of the art. And one thing that makes something state of the art is that it's easy to use for everybody else. So when they build a service, they build it that way that you could use it on your website, in your process. There are even some firms who are disrupting the industry, not by focusing on customers, but they are building APIs for disrupting other service corporations that work for the banks. One major example is the Bloomberg and Reuters and all those guys who are providing market data. This was a very nice playing field in the past, because these were very expensive data you could get from Reuters, stock prices and everything else. And currently there are two companies who are focusing on an easier way to access this data, to use it in a way you would fancy and not that Reuters would think would be right. And that is really a growing business. Another thing is artificial intelligence, or AI, because people think that AI will be a way to get financial services, financial advice on an easier way to a specific customer. They want to substitute the individual financial advisor by an algorithm, and you need some good AI to get this done. Actually, aixigo is working on an AI project with IBM where we read customers' how would you say that? Where we do read customer information that is written, not being in a defined way, but just plain written things that someone would do, and get this done by Watson, who reads all the words, get the keywords out of it, and making some sense out of it to make propositions to the customer without any person reading it. And actually, it works quite well. It works quite well now in English. We are not now doing it in German, but it's quite interesting to see what AI can do now. And something you might have heard, Bitcoin is something I expect everybody would have known, because that's the dark market currency. The technology behind this is blockchain, and blockchain will make it possible that you can transfer money in seconds from here to any place in the world in a secure way. And they're investing huge in this technology. Bitcoin is right now just something people will see as a symbol of blockchain. Bitcoin, in my opinion, will die, but the technology to make it really easy to transfer money in that way will revolutionize a lot of business models where companies make a lot of money by taking days to get money from the US to somewhere else. Years ago, it was I knew banks in Germany who just existed on the fact that it could take a week to get money from Munich to Hamburg. These days are over. It has to be one day, and this one day will be limited to 0. It will be in real time with blockchain. So this is my short statement about what's happening in the financial world. Myself, I'm very enthusiastic about digitalization and financial service and the combination of that. I do lectures on fintech and disruption quite often, and I have a strong opinion on digital experience, investing, and financial customer experience. So if you'd like some more information about that or keep in touch with me, follow me, add me, mail me, or invite me.